So in this video, we will be discussing the lower of cost or net realizable value and lower of cost or market value. Okay, so and the gross profit and retails. So this is the final exam review part 3. Let's start. So we can see that net realizable value is equal to estimated selling price minus cost of completion, disposal and transportation, meaning cost of sales actually. Net amount a company expects to realize. This is the net, okay, so or collect in cash from the sale of an inventory. So and at the end of the year, a company compares the cost of its ending inventory to inventory's net realizable value. Okay, and now if net realizable value is lower than cost, adjusting entry is needed. Can you see that? So reduce inventory from its already recorded purchase cost to the lower net realizable value. Okay, and if cost is lower than net realizable value, no adjusting entry is needed. So let's see one example. You can see in this example that we have different items A, B, C, D and C, D and E. So and A and B one category, C, D and E is another category. There are two different categories of products we have. Okay, and we have the cost, net realizable value. So let's see here we can see that item A, the cost is 50,000 and NRV is 85,000. So lower of these two is 50,000. And in case of B, so cost 100,000 and NRV is 90,000. So lower one is 90,000. Okay, and total of this by category, meaning total of A and B is 150,000. Okay, this is 90 plus 50. Okay, so no, actually total cost is 150 and NRV is 175. So out of these 150 and 175, 150 is the lower one. So 150 we have taken. Okay, and for C, D and E the same thing we have done, and we have sum of the total of C, D and E. So we have seen that we can see 265 and 256. Out of these two, 256 is the lower one. Okay, so we have now the by category, we have total 406 and by individual item 395, and here we can see by total amount cost is 415 and NRV is 431. So we will compare between these two, and the lower one is 415. Okay, so that is we have taken the 415. Okay, so now we will calculate the difference between these two. Okay, let's see the difference between these two. So the difference between so the difference between the NRV individual and cost is 20,000. So we need to prepare journal entries for this 20,000. So the cost of goods sold and inventory, and loss on write down of inventory and inventory. So this sentence is important. See that the debit cost of goods sold if write down is common for that particular company. Okay, and debit loss when the write down is substantial and unusual for that company. Okay, so let's see an example here. Okay, let's see one example of the lower of cost of our net realizable value. This is the same example that we have already solved in previous slides. So you can see that the A, B, C, D and E, they are different categories. So here is the solution. So see 50,000, 85,000. So lower one 50,000, and we have also solved this problem in the class as well. So 190, the lower one is 90, and total cost and total NRV out of these two, 150 is the lower one, and here you can see that 80 and 75, 75, 90, 85, 85. So 95, 96, so 95, and that total is 265, 256, 256. And total of this one and this one is equal to 415,000, and total of this one and this one is equal to 431,000, and total of all of this is 395,000. So out of these two, the lower one is 415,000, so 415,000. So, and the difference between this one and this one is 20,000 by individual item, you can see. So we will write a journal entry, that is cost of goods sold debit and inventory credit. Okay, that is 20,000, the difference. Okay, this is how we solve this one.